Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, the Nasdaq's having a little rally up about 150 points. This is because Google came out with good earnings. Microsoft came out with good earnings. Dow, however, is kind of flatlining. Not much going on there. Now, what happened yesterday? Yesterday, we had the drop in the market, right? And this drop in the market took the S&P below the 10-day, below the 20-day. Okay, so the bears have now taken over the stock market and we're moving in the lower direction. Now, the lower direction, it's going to take time to play out. It's not going to be a straight line down. But if we do get a bounce back up, the shorts are going to come back in and they're going to pile on and push this market lower. I think that we can see this market come down and retest the October lows down around the 3,400 level. Now, we're at 4,100 right now, so I'm talking about a 20% decline. And a lot of people aren't going to be too happy with the 20% decline, but I do think it will happen. Okay, so how do we know when we've come to the bottom, when we come to the end of the decline? Well, you'll see the VIX start to spike up. Now, the VIX was at 17, and now we jumped up to 19, and I do think that the VIX will spike up above 30. Above 30, the VIX is high. Below 20, the VIX is low. So once the VIX gets up above 30, that's how we know we're getting close to the bottom. But we still have a long way to go, and it's not going to be a straight line down. It'll be some up, some downs, but there'll be the downward direction down to retest the October lows. All right. That's my take on the market. Your take could be completely different. Well, let's get over to the real estate market. Now, I read an article yesterday that, well, it kind of cracked me up a little bit. Look at home prices jump in February, breaking 7 months of home declines. All right, so home prices jumped in February. That's interesting to me. How much did they jump by? Well, they jumped by 0.2%. 0.2%. Now, to me, that's not a jump. That's a rounding error. Look, maybe they did, maybe they didn't. Now, it's interesting to me that you get this data from back in February. We're going into May already. Look, with this technology we have now, can't we get the data quicker? I would think that we could, but for some reason there's a delay and we're just getting the February data now, and they talk about a jump of 0.2%. Now, you haven't heard mainstream media also talk about the 7 months of declines in a row. That's prices going down 7 straight months in a row, going down at the fastest rate in recorded history. Okay, so we're down about 10% overall on a nationwide basis because that's come down 7 months at about 10%. That's a very quick decline, but it's nowhere close to done. The article would make you think that we're done, that we're starting to jump back up by 0.2%. I don't call that a jump. I don't think we're anywhere close to the bottom yet, but they want people to get back into the marketplace. They want people to start buying homes again. Now, we're in the spring selling season. I don't think it's going to be much difference. Maybe it's a little jump up, but nothing goes straight down. Nothing goes straight up. We still have a lot more to the downside to go. And I do think that we're going to get this downward pressure on the market. I think we're circling the drain in a downward direction. But what's really going on in the real estate market that scares me the most? Well, it's the banking system. You see, real estate is a debt asset. Most people buy homes with a mortgage. They need to borrow money. They need debt in order to buy the home. Now, if the debt starts to tighten up, if the liquidity in the markets go away, you cannot get mortgages. Now, if you listen to Janet Yellen, she'll tell you, well, the banking system is safe. Now, I think that she's just flat out lying to you. I think she knows that it's not safe, but if she told you the truth, you'd run out there and get your money and there'd be bank runs, right? Now, another bank just went down this week. Well, it's First Republic Bank, right? Okay, so they're having bank runs. 40% of the money has been pulled out of the bank. Now the bank's having trouble surviving. Now a month ago, this stock was trading at $130. Today you can buy it for $5 and change. But I'm not sure First Republic's going to make it. So I would not recommend going out and buying the stock. Now what happens when you have these bank runs? Well, everybody pulls their money out of the bank, but the bank doesn't have your money. Now I'll tell you, it doesn't matter what bank you're in, your bank is insolvent. Yes, your bank. My bank also. All banks are insolvent if they mark their assets down to the market. It's called mark to market. These banks are carrying their assets at a very high level, about almost 100% more than they're worth. They're worth about 50% what they're carrying them at. And if they were forced to mark their assets down to the market rate, these banks all would be insolvent. Insolvent means that they have more liabilities than they have assets, because the assets that they purchased went down in price. But Janet Yellen will tell you that these banks are safe. Well, now First Republic, they have to raise money to try to stay alive. Now, what do they got to do? They got to sell their assets. But their assets aren't worth what they say they're worth. They're worth about 50% of that. Now, what type of assets do regional banks own? Well, they own things like commercial real estate. Commercial real estate's already down about 30 or 40%. So they got to have a fire sale now. Now, is commercial real estate a liquid asset? Not really. You try selling a high-rise office building. Look, that's not like selling a house. A house, you can go out and you can sell it in a couple weeks and you can close it in 60 days, let's say. But a commercial office space, you're lucky to find the buyer 6 months to a year out. And then to get it closed with all the due diligence, it's going to take forever. So they got to dump this stuff at fire sale prices. So the prices are going to continue to go down. They're already down about 40%, but soon they'll be down 60%, then 80%. Now, a lot of people think, Mike, you just always talking negative. This is so negative. It's really not. This is opportunity. Look, if you want to go buy an office building, you're going to have a chance to buy it for 20 cents on the dollar. That's opportunity. Now, I think that opportunity's coming to the housing market. Now, why do I think the opportunity is coming to the housing market? Because we haven't learned anything. We haven't learned anything from the 2008 subprime crisis. What are we doing right now? We're trying to push people into buying houses. We're trying to extend people credit. We're trying to give them a 40-year loan now. 40-year mortgage is starting to become commonplace. We're in California. We're giving them the down payment. Here, take the down payment. Just take it and go get a loan and you buy the property and you're in the property. You're a partner with the state of California. What's Biden doing? Well, he's trying to subsidize people with bad credit. People with bad credit so that they can get into the marketplace. He's trying to subsidize them by charging the people with good credit more. It's backwards of what it should be. Penalize the good people for doing what they should be doing and rewarding the bad people for bad behavior. Okay, so everything's upside down, but they're trying to put more and more people into the housing market. Now, why are they doing this? Because they know the housing market is at record highs, at all-time highs. Were they trying to push these people into the housing market in 2012 when the market was low? No, of course not. They didn't want people buying them. They want them to buy at the high. So they're trying to sucker them into the marketplace, so they're going to get really hurt. Look even if you don't put up money, you're still going to have negative equity that you're going to have. You're going to ruin your credit. Everything is going to be circling downward. They're trying to push people into the market that shouldn't be buying houses. These are people with bad credit, people that need 40-year mortgages just to qualify. These are people that should not be buying homes, but yet they're trying to push them into the market because they know the market is at an all-time high. Okay, so people now, it's at an all-time high, right? Well, not quite. Billy Bob got out at the top. We're down about 10% below that. So a lot of sellers right now could still sell and get close to the rates that Billy Bob Bob got, but they don't want to sell because they're waiting for interest rates to come down because they think that's going to push houses higher. Not going to push houses higher. Look at a lot of these people that are buying now are going to have a lot of buyer's remorse. They're going to be so unhappy that they purchased a home right now, right? Because they're buying at the top. They're buying up there where Billy Bob sold. Look, there's a problem right now in all real estate. Commercial real estate's going to have a fire sale. There's going to be foreclosures coming into the market, into the housing market, and that's going to push prices lower. Right now, we're going into a recession. We're going to have a lot of job layoffs, and these layoffs are starting to happen right now, but there's a little bit of lag time. You get laid off today, you don't put your house up for sale tomorrow. No, you try to make it. You try to survive. You try to make the payment, but you can't do it. 1.5 million people are already behind on their payment. These are going to be the foreclosures. These are going to be the ones that are going to be forced sellers forced into the marketplace to sell their house. Now, these people that they're stretching to get into a property right now, they're going to end up being foreclosed upon. Their house will go into foreclosure. They'll have to sell and they'll have to get out of their house with negative equity. Now, negative equity is terrible. Look, back in 2008, I was doing short sales for banks. Now, I had clients where they bought the house at $400,000, right? And they put $200,000 down. Okay, that sounds good, sounds safe, right? But the house went from $400,000 all the way down to $100,000. $100,000 is where we sold them short at. They lost $200,000. The bank lost $100,000. Everybody's a loser when the market come down, except for the people that buy pennies on the dollars, the ones that were picking up the short sales, picking them up for $100,000. You know, that $100,000 that they bought, that price was up past the $400,000, up to $600,000 now because the bubble's bigger. There's going to be opportunities for you. Now is not the time to be buying. They're trying to push people into the marketplace that can't afford to buy a home. These people are going to end up severely underwater. They're going to lose all their money. They're going to not survive in the housing market. Theirs will become a foreclosure. But yes, there's going to be opportunities down the road. Sit back and relax, and the opportunities are coming. Now, are they going to show up this year? Probably not. Probably not. Maybe at the end of this year, because by the end of the year, I think we'll be in a full-blown recession, maybe even headed into a depression era. And that's going to really put the pressure down on houses. Now, that's not being negative because there's going to be opportunity. Opportunity for people that are waiting. Opportunity for Billy Bob to get back into the housing market. He's on vacation until these house prices come down, and they're going to come down. People are going to get hurt. Right now, people are feeling rich, right? They're feeling rich because they can go on Zillow and they can look at what their house is worth. They go, oh, wow, look at my house is worth $1.5 million. I only paid $1 million. I got $500,000 in equity. If you don't sell, if you don't get out like Billy Bob got out, that equity can go away overnight. It can go from $1.5 million down to 1.2, down to 1.1, down to $1 million, down to 900,000. All of a sudden, you lost all of your equity. All of a sudden, you're in negative equity. Oh, and you want to sell your house, you're going to have to bring another 100,000 plus pay the closing costs to sell the house. Look at this housing market is going down. We're at the peak. We're going to revert back to the mean. We always do. But Mike, this time it's different. We're going to print trillions of dollars. Everything's going to go up. We're going to get 40-year mortgages. They're going to give us free down payments. They're going to keep the housing market going up. And that can be your take. A lot of people believe that. Dave Ramsey believes that house prices only go up. I'm not one of those that believe that. This market's coming down. Yeah, it's going to take some time to play out. But this article that's telling you we jumped in February, that the bottom's in to hurry up and buy, no, it's a mistake. Don't make the mistake. Sit back, relax, wait for the prices to come down. There's going to be opportunities. Maybe 2024, maybe the end of 2024 where the opportunities are. You go buy a house right now. I know a lot of people. There's a lot of demand for houses houses. Look at that free money for the down payments. They gave away $300 million and it took them 3 hours to do it. $100 million an hour was given away. They bought $1.5 billion worth of properties. Look at those are all going to end up in the foreclosure basket. They're all going to be foreclosures. When the prices come down, the opportunities will be there. You just have to be a little patient. Sit back, relax. If you're going to buy, wait. My advice is to wait. And I'm a real estate broker. I'm supposed to be telling you it's a great time to buy. It's always a great time to buy. It's not a good time to buy right now. Hold off if you can. If you don't need to buy, don't buy. If you have an extra house, a rental, a vacation home, and you want to sell, now might be a really good time to consider selling. That's just my take. Your take may be completely different. If you like this stuff, give me the thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Have a great Wednesday. We'll talk again real soon. Bye-bye now.